Long before paper bills or minted coins, humans had to create their own system of value. Ancient tribes didn't need banks or currencies to survive. Instead, they built their own banking system based on trust, reputation, and resource exchange. These early economies were driven not by money, but by the inherent value of goods, actions, and relationships. The concept of tribal banking was simple. If someone needed food, shelter, or tools, they could trade what they had or promise to provide in the future. A hunter would exchange meat for firewood from a gatherer, while a skilled craftsman might offer tools in exchange for livestock or protective services. Trust was the currency, and social bonds were the savings account. People were expected to fulfill promises and maintain their reputation. A bad deal could cost not just goods, but status and safety within the tribe. Imagine a tribe living by a barter system, their lives intertwined by an invisible economy where every transaction was based on a shared trust that the agreement would be honored. When a dispute arose, it wasn't solved by law or money, it was solved by the strength of relationships. The tribal chief or elder was often the mediator, using their power and respect to settle any conflict. In tribal societies, items were exchanged not simply for their material worth, but for their symbolic significance. A feather, a rare stone, or a carved bone could hold greater value than its weight in meat or tools. Certain items represented status or spiritual power, while others held sentimental value. For example, the feathers of a rare bird might be more valuable than a day's worth of food, especially in tribes where feathers represented spiritual connection or leadership. A sacred stone could serve as a currency for important negotiations or even ceremonial exchanges, symbolizing the tribe's connection to the land, ancestors, or gods. In this barter economy, goods were a form of spiritual currency. They weren't just practical tools for survival. They were tangible representations of each person's contribution to the tribe's well-being. The more respectable and trusted a person was, the higher their value in the community. Wealth wasn't defined by accumulation, but by community standing and generosity. It was this shared sense of worth that ensured survival. Unlike modern economies where disputes are resolved through courts and currency, tribal economies relied on the strong moral fabric of trust. If a barter wasn't fulfilled or an agreement was broken, it wasn't just a transaction at stake. It was community stability. When someone owed something, they were expected to repay not just with goods, but with their honor. A broken promise could lead to social exile. Mediation, often by the tribal chief, was integral to maintaining peace. The chief would listen to both sides, invoking the tribal customs to settle disputes, ensuring that fairness was restored. Trust was essential because without it, chaos would ensue. Every transaction carried the weight of personal reputation. Unlike modern-day banking systems where wealth is abstract, tribal trade was deeply personal. If you betrayed a deal, you didn't just lose goods, you lost your place in the tribe.